Welcome back to Midcap Radar. Well, the top story of the day is Gujarat Gas, and the stock is buzzing today as the board has approved the merger as well as the demerger plans. Harshvardhan Dole, Senior Vice President of Institutional Equities at IIFL, joins us. Good afternoon, Mr. Dole. Thank you so much for joining us. First up, what is your take on the situation? The analyst community is quite divided. A few of them have actually gone ahead and upgraded Gujarat Gas, saying that this particular deal is EPS accretive. But I believe you have a more moderate view of this particular development.
Hi, Vivek. So I think the deal is great if you view it from shareholders of GSPL and government of Gujarat. Because what it enables is it eliminates the holding company discount that otherwise GSPL shareholders were cribbing about. And it also eliminates the web of complex shareholding through various Gujarat and Gujarat state-owned entities into the underlying cash-generating value-accretive business of Gujarat Gas. And to that extent, I must congratulate the architect of this deal. It's a great deal from Gujarat government and GSPL shareholders' perspective. So all full marks to them. However, if you value the deal or perceive the deal from a minority shareholder of Gujarat Gas, for them, the merger can be greatly value-accretive provided there is a sustainability in terms of gas sourcing. And apart from the tax shelter, which the company might enjoy for a couple of years, if the other businesses can add great value to it. As of now, based on the initial discussions with the management over the conference call and our cursory reading, it appears that the merger synergies or what you may call as levers for value creation seem to be quite limited. And therefore, we prefer to take a more cautious view rather than taking a blindfold view or rather a leap of faith. We would like to evaluate the situation as it unfolds over the next few quarters. That's the sum and substance of our view. I think it's a great deal from GSPL shareholders' perspective, but not so great deal when it comes to shareholder of Gujarat Gas.
But Gujarat Gas share price, Harsh, has gone up close to about 10%. So the street is clearly, cheering this transaction. So, what is it that, the street is missing, and what would your own target price be? I know you've explained it, that why it's negative for minority shareholders, but it's at odds with the way the market is reacting today.
Sure. So, clearly, if you were to build in the tax shelter, and some amount of tax, essentially leakages, which otherwise were happening on account of GSPC selling gas to Gujarat Gas, there is definitely some accretion to the EBITDA. And to that extent, it will be unfair to say that there is no gain to Gujarat Gas. And which is what we have articulated in our note, that if you assume a seamless execution, that 3-4 rupees of gas saving occur to Gujarat Gas, then fair value for the total amalgamated entity can be in excess of 700 rupees. However, for that to unfold, one has to source gas very efficiently, retain the entire benefit, not pass it on to price-sensitive customers like Morbi, and give a very liberal price to earnings or EV/EBITDA multiple. So probably some investors would like to price such benefit upfront rather than they unfolding over a period of time. It's a perspective.
Harshvardhan, one question from when you're talking about the valuation multiple, currently Gujarat Gas enjoys a valuation multiple based on the regulated CNG business. Now, however, there is now volatile trading business that comes into its fold. So would you go ahead and temper down the valuation multiple that you give to Gujarat Gas as this particular earnings comes into the picture? And number two, currently on ground, how's the situation when you compare Gujarat Gas to other sources that Morbi players can actually enjoy?
So Gujarat Gas traditionally has been trading at a significantly higher multiples for its great revenue model. For example, it is insulated from the EV risk which otherwise IGL or MGL were susceptible to. Here is an industrial portfolio which enjoys relatively higher pricing in terms of, rather pricing freedom in terms of sourcing the gas and pricing it. That, however, may change over a period in time. And therefore, in my opinion, the long-term EV/EBITDA multiple may converge to that of IGL or MGL. So that something is, we'll keenly watch out for as to how the amalgamation plays out in terms of sourcing of gas and eventual pricing of the gas. As far as other businesses are concerned, Vivek, it's, let's see, what additional information emerges as to how do they restructure the LNG terminal, where currently they are a minority shareholder, and how can they unlock value for the minority shareholders. So we'll keep a watch, we'll gather more data points and take more educated call rather than reacting based on sketchy information which is available.
Harshvardhan, so, what is the pecking order for you as far as the oil and gas space is concerned? Which are topics and which are the ones you don't prefer?
So at the moment, we find extremely high value in terms of the PSUs, which is the upstream as well as the downstream OMCs. We find the payoffs to be asymmetric. The upside to downside ratio is extremely favorable for a value investor. And to that extent, we like all the five. If I were to pick two, probably I will pick BPCL and ONGC at this price.
Okay, Harsh, we'll leave the conversation here. Thank you very much for joining in. The Nifty's